Hello, and welcome to QuickBooks in the Real World. This is Marie Gibson, and I'm here to encourage you to fine-tune your QuickBooks software so that you can actually use your numbers, you can use your story, so that you can make wise business decisions with certainty in very uncertain times. This little snip, this little section, this little quick module is specifically on prepaid expenses. I'm going to share my screen with you right now. I'm using the QuickBooks Online version of the software. And let's come right in here. I'm going to share. This is Craig, our friend, right? He's our sample company. And he allows us to take a look at his dashboard. He lets us look at his banking, his expenses. He's just been so generous. And of course, you know that I'm teasing as a sample company. I never that I use the sample companies. I never disclose the confidentiality with my own clients. But let's say that I have a new expense. And this new expense could be written with an expense as a credit card charge. It could have been written with a check. It could have been a bill and a paid bill. And let's just say right now that it's an expense. And I'm going to pay, oh, there we go. Let's pay our insurance company. And we're not going to use this little guy over here. And I'm going to put it on my MasterCard. And the payment method is, of course, MasterCard. And our insurance, it's liability insurance, and it's for January through December of next year. And it's for $12,000. Has very expensive insurance. And of course, we could apply a class. We just learned about some class tracking. It's for my overhead. I'm going to save and close. Now, all of you know, and we've looked at reports a couple of times now. And if you haven't seen this whole series, you need to go back and watch some of these. They really help so that you can encourage your software to provide you the numbers that you need. But if I'm looking at this, I see that my insurance expense for this year is $12,241. It's way overblown. It really changes my net income. It changes my profit for the year. It's convoluted. It's not the right number. This is actually for next year. So what I would do instead of actually posting that as a true expense, as a hard expense, I would take this category, this account, and I would scroll. And you know, in QuickBooks, we have access to all of our accounts right here at our fingertips, one of the nice features. And this is actually going under, I could choose prepaid expenses or prepaid insurance. Some people use one account to record all of their expenses, and some people have multiple expenses, and so they like to keep them separate. But it's prepaid insurance, and it's applied towards overhead. So it's kind of the same. It still hits our checking account, right? It comes out of our checking account. But now, instead of being on the profit and loss report, which is not what we really wanted to see, it's on my balance sheet. And I don't remember the date, so we might have to go in and look at the date. We did catch it right here, prepaid insurance. And so it's held on this balance sheet until I'm ready to actually use a little bit every month for the next 12 months. So the way that I actually make that adjustment is with a journal entry. And journal entries allow us to move money from one account to another account. That's all they're there for. Just moving. So if I were going to move this on, let's say January 4th, we'll just grab a date, and I have insurance expense, and I have prepaid insurance. I need to say that one of them's $1,000 and the other one's $1,000. And sometimes we're never really sure. I don't always encourage business owners to learn debits and credits. I encourage them to do what they do best and then get her done, right? So in this case, I just say, I don't know. I know that in the month of January, this is January's insurance. Oh, if I could spell that, January insurance. I can memo that. It's an adjustment. It's a general journal adjustment. And if I save and close this, I think, oh, I'm happy, and life goes on. Well, what happens is if I update this report and I change the date, and let's say I capture the date, the balance sheet, and it's for January, we'll go to the 31st and see what our report looks on the January 31st. Now I have $13,000 of prepaid insurance. Well, that's kind of weird. That's obviously not what I kind of wanted to do, right? I didn't add to the kitty. I was trying to take it off that amount. Let's go back and look at our profit and loss report. What on earth would have happened to that? And so here's my profit and loss report. And let's say that it's, I don't think it'll let us grab next year to date. Let's grab a custom and let's roll it all the way into January, right? Because we're trying to capture that one little date to show you where it lands. And when it lands on my insurance now has a negative number. And if I click on that, we can zoom. Oh, well, look, there was my one bill, and then there's a negative insurance. Boy, I sure enough got that journal entry backwards, didn't I? And so we slide right in there, $1,000, and I reverse the debits and credits. And again, all we're trying to do is move $1,000 from one account off of our balance sheet onto our profit and loss report for January. We would save and close this, and we go back and we check our reports. Sure enough, that posted correctly. I now have $1,000 positive. It's an expense. And then on my balance sheet, if I go back and look at my balance sheet, of course, we would not expect to see 13,000 as we had before, would we? We'd expect to see something a little bit different. Run this report. And my prepaid insurance has reduced down to 11. And then in the next month, it reduces down, and the next month again, and it reduces, so that each month you apply that $1,000. Now, one of the tools that I really, really like in all of the software, they actually have the ability to, and when I say all the software versions, I love the tools. I love the automated features. They just have to be set up and used properly, but we can make this reoccurring. So this journal entry, once you have it correct, you can say that this is my monthly insurance. It's an adjustment because we already did pay it, and we don't need to schedule it maybe one day in advance if you really want, but monthly on the second day of every month. And now that we've entered January's, we don't need to enter January, so we'll enter February, and it ends by December 31st of the following year. Whoops. And so this becomes saved, and it's automated, and it can be recurring. So every month you now have a journal entry. Now that's really, really good until the next year rolls around. You don't want to continue having the $1,000 recurring after that. That's why we put the end date, right? You would have another prepayment, and that prepayment would take this one's place. So anyway, thank you very much. I trust it's been helpful. I know that a lot of people do ask me about prepaids and how to handle prepaids and how to handle journal entries. And business owners particularly get a little nervous about that. And they don't particularly get nervous when their staff are making some journal entries that they're not really sure of. And I always say, go to your reports, make the journal entry, look at your reports. Is that what you're expecting to see on your profit and loss, on your income statement? Is it what you're expecting to see on your balance sheet? Or did they reverse? Did they go wonky? Did they go the wrong? Wonky is a technical accounting term, right? So, and if so, you only have a 50-50 chance the first time of getting it right. So you switch them, and now you have a 100% chance of getting it right. So thank you very much for joining me, and I look forward to talking with you soon.